After a significant move towards the upside and bullish momentum returning to the markets, Bitcoin has seen a decent move towards 17,400. Unfortunately, a rejection from this major resistance zone has left people questioning whether this move is a reversal or a bull trap leading into CPI. We're going to go ahead and try and answer that question today. Let's go ahead and get into it. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're all having a fantastic day. We're going to go ahead and jump into our analysis today, discussing Bitcoin, talking about the short-term price action, discussing the rejection from 17,400, of course the structural analysis, and of course what we expect to happen over the next few days for both Bitcoin and the traditional markets. Before we get into it, smash the like button, hit the comment button, and subscribe to this channel. We do daily technical analysis and structural analysis for Bitcoin and the broader markets over here. So if you like that, go ahead and click that subscribe button. We also have our Telegram channel, which will be the second link down below. You'll get access to all of our charts, analysis, information, videos, and a lot more stuff in here, guys, to keep you updated with the markets. Of course, news events, when relevant, will be posted in here as well, and the occasional exclusive analysis. If you're interested in trading signals with exclusive entries, exact targets, exact stop losses, and so much more, including exclusive altcoin analysis and of course our exclusive group chat, you can go ahead and contact me to get access to our VIP channel. All the information can be found up here with membership details, of course, and our trading track record since February 2021. Let's go ahead and jump into today's video, and we'll start off the market data. So what are we looking like so far for January? We're up 3.77%. Really nice to see overall. Again, we ended, the last quarter pretty red at a -14, and we had 4 red consecutive quarters, and now we're finally having a green quarter currently, which is obviously nice to see. A lot of people are starting to question, is the bull market coming back? We're getting a little bullish momentum. The uptrend's coming. Is this going to lead to a reversal? We've talked a lot about that already in the last couple of days, even over the last few months, really. But today we're really going to focus on the short term. Is this move significant? Will this move directly lead to a reversal, and when will it occur? Because this move can be extended over the next few weeks. It doesn't have to immediately lead to a reversal. We could even see a pullback back down to new lows before this move actually takes us upwards again. So we'll come back and talk about that. Volatility at 1.34, no movement since yesterday, exactly the same. Liquidation is 130 million, sitting around the same amount as they were yesterday, a little bit lower for this time, down about 27%, but 24-hour volume is 72 billion, up 44%. So a lot of volume is coming back into market. We're going to see a lot more movement, and particularly in altcoins where we're seeing the majority of the movement as Bitcoin dominance has been falling. Let's go ahead and talk about the rest of the market. So the DXY has lost the 103.78 level. Again, it is in a downtrend over here. I'm not expecting anything to happen here until we either see 2 things occur: a break back above these gray levels for a swing upwards, or of course a continuation back down to our nearest support, which is 101.33. I wouldn't be expecting too much to happen, excuse me, on the DXY right now. We do have some degree of a bullish divergence playing out, but again, with CPI coming out very shortly, which is in less than 2 days, we'll be talking about in tomorrow's video, we can see the DXY be shifted in all sorts of different directions, irregardless of what the charts are looking like. So I'm not really too concerned about what they're looking like right now. What we can say for sure is our next support is going to be 101, and our next resistance, of course, is 106. And those triggers for those resistance breaks are, of course, these gray boxes. Moving on to the Dow Jones, not looking fantastic. We have seen exactly what we expected to see, and that was our rising channel to develop. So we did predict that rising channel to develop. It has actually now developed, and as you can see, we have actually retested the top side of that rising channel, rejecting from not only the dotted line, which was our trigger for a continuation upwards, which you never actually broke above, and of course our rising resistance, or ascending resistance of the rising channel as per the structure over here. So again, this is a bearish pattern. We do expect a move towards the downside, taking a measured move we take from the entry to the first low, extending that to a breakout point. We can expect anything to about 32,000 for the next lower. So we're looking around 32,000 if this is in fact a pattern that will break down Again, it isn't guaranteed, right? Just because we're in a bearish structure, it doesn't mean we're going to break down. There is just an increased probability that we will break down in comparison to what we would to if we had to break upwards. Okay, there's about a 64% chance we'll break down towards the downside based on the current structure. So the downside target, of course, is 32,000. S&P 500, guys, exactly the same thing over here. Rising channel structure, a little bit less clear than the Dow Jones. Again, our targets are, of course, this gray box, 3,600, and of course, breaking over these local highs will result in the next move upwards, the trigger being the diagonal resistance. Okay, moving on, we can see the bond yields aren't moving too much. We did see quite a nasty drop on the bond yields on the 2 years and the 10 years. The 2 years have retraced all the way back down to these lows we were kind of developing throughout the month of December. So retrace back into the support zone again. For the bond yields to fall again, we do need to see a loss at this level and a continuation back down, which will take us down to about 4%. So we're looking for 4% for the next move towards the downside if we do lose this level. And again, that would inherently bring the DXY down to about that 101 zone, that resistance support level we're looking at, where potential bounce could actually take place. Until then, we are expecting a reversal in the market. So right now, as you can see, what we're talking about, the bias in the market right now is bearish. Okay, you can see the bias in the market for today is bearish. We've been very bullish over the last couple of days. For today, the bias is bearish, and therefore we should look at Bitcoin with a perspective in which we can facilitate a potential move towards the downside. And that's what we're going to do. We're going to look at it from a little bit more of a bearish perspective today, taking into consideration bond yields, obviously DXY, stock market. We should see a correction on Bitcoin. We are seeing that similarly. So let's take a look at what's happening. If you remember back to December, we're talking a very, very long time, this downward sloping resistance. We're saying this downward sloping resistance here, this is the resistance that's going to trigger the next move upwards. We said if we break through our resistance, the next levels we're looking at are 17,200 and 17,400. We said we weren't going to enter straight away. We're going to see if we could close some 4-hour candles above this gray box. We closed a lot of 4-hour candles above the gray box, which was great. And therefore our entry was those 17,200, 17,400. Both targets reached. Breaking through 17,400 was the big one to result in a move up to 18,000. Again, if you remember back to our video, I think 4 days ago, we were talking about how we were within a few different channels. We had our horizontal channel and medium term time frame horizontal channel between gray line to gray line. We had our larger time frame horizontal channel, which was of course between our red box and our green box. And then of course we had our smaller time frame horizontal channel between these two levels here. Of course, breaking out of those separately have resulted in a move upwards. So currently what we are seeing is a retest of the upper resistance of our horizontal channel. Okay, therefore we are at the strongest point of resistance according to our structure, then that we have been in for quite some time, and therefore the directional bias right now is toward the downside. We are expecting a swing low towards the downside until this resistance has been broken and proven it has been held as support, and a continuation upwards to 18,000 can take place. So what we're going to do to analyze this, because there's a lot to talk about today. First and foremost, we'll go over the structures, talk about the short-term directions based on these structures. Then we'll go to the macro, talk about the macro reversal, because we still need to talk about that. And then we'll also talk about where the price can go down to on the macro if this all turns into a bull trap. And obviously this pump was nothing more than a little bit of volume coming into the market after a period of massively reduced volatility and massively reduced volume. And we'll also talk about the implications of CPI briefly, but we'll get into that in a little bit more detail in tomorrow's video. So what we're looking at over here for the downside, like I said, every single one of these boxes here that you see, we'll get rid of the RPV, is a significant area of support now. Okay, the only one that is resistance, of course, that we can see on the immediate screen over here is 17,400. 17,400 is a very important level. Breaking over 17,400 will facilitate a move upwards to retest this red area. Okay, this red area is the June to November absolute bottom. That is our June to November low. But it also constitutes the downward sloping diagonal resistance of our current falling wedge structure, which you can see on this chart over here. So it has 2 points of key significance. The 17,400 will facilitate a retest of the downward sloping resistance, which will constitute the second point of validation we need for reversal confirmation. We'll get back into it in a second if you don't understand that, okay? but also retest that June to November bottom, okay? So 17,000 is very important to allow that move to occur. If that move occurs, the reason I said it's the second point of validation is, if you remember correctly, we have a few points of validation we're looking for a reversal to take place. We're looking for, number one, a break on the weekly RSI. We have actually seen that. We have seen a breakout on the weekly RSI. The breakout on the weekly RSI suggests to us that there is an increased probability that when we do see this reversal play out, this reversal will actually be sustained, okay? That is what it tells us. It tells us macro shift in momentum, and therefore whenever this structure breaks, whenever we get a flip in this structure and a reversal does in fact take place, this structure will most likely result in a sustained reversal. The next point of confirmation we need is a break over the VRPV on the larger time frame, the POC level, which is this level here, 19,200. Where does 19,200 sit? Well, at the moment, it is sitting outside of our structure. So sitting outside of our falling wedge structure, okay? So again, for us to actually retest that and validate that, we will need to see a breakout of 17,400 to facilitate a retest of a downward sloping resistance, which will enable a retest and potential break of our June to November bottom, which will then facilitate a break of the POC, okay? So, and then finally, we need our 50 EMA cross on the 2-day chart. If we go to the 2-day chart, you'll look at the red line over here, the 2-day chart, which is that red line, which is actually closing in on 18,000 right now. So 17,400 is a lot to it, guys, but 17,400 is a very key level as it facilitates the potential breakouts, retests, and validations of those key points we're looking at to actually sustain and achieve what we would call a macro reversal, okay? And a macro reversal doesn't automatically put us into a bull market, but it will allow us to potentially develop a base of support which can eventually be built on over a period of time, which will then eventually allow us to enter a bull market. So bull market will not start for a very long time, okay? 2024, I think April, June was our prediction, or May, April, June, around that area. But we can definitely see a strong uptrend between now and then if that actually is facilitated. So again, looking for those points, and that is why 17,400 is very important. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures, is one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. Toward the downside, however, was right now, guys, we are in a downtrend, right? We are in a neutral consolidation. Okay, this is inherently a bearish structure. First and foremost, the reason why our short term is a bearish structure is because we entered into this horizontal channel from the downside. So the direction we enter into this channel is generally the direction we exit the channel. Okay, so this is another thing. The falling wedge, although it is bullish, it is not 2 things. It is not validated in the sense that we haven't had 5 points of retest. We've only had 2 top side, 2 bottom side, so we need 1 more on the bottom side or potential top side. And number 2, we are still within this downtrend and within the structure, and therefore we could actually potentially see another retest of the bottom, and that would actually result in a drop lower to a new low whilst we remain in a bullish consolidation. Very, very likely. I would say that's very possible, actually. Okay, so looking towards the downside, we are currently in a rising wedge, rising channel structure. Rejection, fake out at 17,400, major resistance zone as indicated for the last couple of weeks, even months. Okay, moving down over here, we have our uptrending support line. If we lose this uptrending support line, I would believe we're very likely to continue through this uptrending support, which you can see over here, into this red box, and of course down. Okay, if we reach 16,200, I do not believe we're going to be holding again. We've held this area many times before. Every single time we've had massive areas, massive liquidations down below. I believe we'll see the same thing. The only difference this time though, I do not believe if we liquidate below this level, we're going to have the strength to push back up. I believe we'll stay under, and potentially that will facilitate and trigger the continuation downwards. Where will the continuation downwards take us? Super simple, guys. Remember, the charts are literally telling you everything you need to know. Look at the historical ranges on the charts. What we can see is a huge gap in our volume over here between 16,200, okay? You can see it drops off at 16,200. It continues to drop off until we reach 13,900. From 13,900 to 12,000, we have a nice little jump. And then after 12,000, we have an absolute mountain of volume that extends all the way down. What does that tell us? 13,900 to 12,000 is the next support zone. Okay, that means as the price does enter that area, it is likely to slow down in volatility, okay, compress, consolidate, okay, before it makes a directional move, whether it be up or whether it be back down. But if it does go down, it will be nothing quick, okay? Do not expect the price to rapidly crash below 12,000. There is way too much support below 12,000 to see rapid crashes in the market unless some catastrophic trigger enables that move, okay? A massive exchange crashes, something terrible goes on with the currencies, something horrible goes on in the political system, or whatever goes on, something would have absolutely terrible need to happen for us to see a rapid crash below it, okay? Until then, 13,900 to 12,000 is major support, and it should be treated as such. That would be the area I'm looking to buy. So I'm looking to buy in two areas. Area number one, I'm looking to buy within this range. Area number two, I'm looking to buy once my reversal validations are met, okay? And area number three, I'll be looking to buy above 30,000, okay? The majority of my purchases will occur in this range here, okay? And that break over 19,200 as per my validations mentioned, okay? And I'll purchase some more long-term at 30,000 as per what the 4-year cycle does suggest. Anyway, guys, I hope you enjoyed today's video. I'm going to go ahead and leave it there. Remember, the downward bias today is strong. It does look like we are going to be spinning towards the downside very slightly. Look at the 17,400 level because it will tell you what happens next. The charts do say it all. Nothing more to be said. I'll see you guys tomorrow. Cheers.